Ladies and gentlemen, welcome back to the channel. Tesla stock today is up around 0.5%, and we have a lot of breaking news to go over. Tesla specific news, as well as the broader markets news, because we did have that yearly jobs revision number today that definitely needs to be talked about. Okay, now headline indexes, S&P down a little bit. NASDAQ down a little bit. It's actually the Russell that is taking it the hardest. So your small cap areas, your areas that would not do well if the economy did start to weaken further. And in today's report, it didn't look good. It looked quite bad. So we need to discuss that. What Donald Trump and other high-level executives or individuals in the government are saying about this. Hit that like button as well as subscribe to the channel if you have not done so already. Check out that link down below in the description of today's episode. If you want to come join the best trading community by far in the entire world, what we are doing is going out, finding small-cap AI stocks, great companies, and investing in those before Wall Street realizes the opportunity. So, again, Palantir today, $400 billion company, but could have bought that on IPO day, okay, like I did. You got to spot the opportunities first. That is how you make a lot of money in markets. It's by being early and not being late. Check it out if you would like to in the description of today's episode. And let's get into all of your Tesla stock breaking news. In the news today, not in order of importance, but just starting off with the first piece here, wireless charging will not be coming to the Cybertruck due to efficiency challenges from the vehicle being too high off the ground, according to the Cybertruck lead engineer, Wes Morrill. He says wireless charging for something as far off the ground as the Cybertruck is silly. He stated that to compensate for the truck's height, the wireless base station would need to be at least 6 inches tall, which is an impractical and clumsy solution for a home garage or public charging station. Wes went on to mention that Tesla never took wireless charging on the Cybertruck past a prototype due to the air gap reduced efficiency. Tesla plans to open its first store in Dobby on Yas Island by 2027. The center will feature 170 dedicated parking spaces equipped with 20 V4 Tesla supercharger stalls, complementing the full suite of integrated services offered on site. Tesla recruiting on X. Yes, that is a Tesla account. I'm not sure if I'm following that, so we'll give that one a follow. Says Giga Nevada, 1 hour from Lake Tahoe, is one of the world's highest volume plants for electric motors, energy storage products, vehicle powertrains, and batteries, including billions of cells per year. They say, come join our LFP residential energy, powertrain, and semi teams. And after 5 years, Polestar has finally unveiled the production version of the Polestar 5, an all-electric 884 horsepower fastback sedan, with the expected price to be over $100,000 in the US. Tesla has announced Megablock, their next generation battery energy storage system that uses the all-new redesigned Megapack version 3. Megapack V will be manufactured in Houston in late 2026 with a 50 gigawatt-hour production capacity. Now, Tesla has announced MultiPass, which uses your Tesla account to charge at non-Tesla chargers. It's now live for Tesla owners in the Netherlands, with more sites and countries coming soon. And Elon Musk does confirm that Tesla will make their own transformers for Megapacks. And these new Megapacks offer 23% faster speeds to install, with up to 40% lower construction costs. So that's a big win for Tesla. The weight of one of these Megapack 3s, 86,000 pounds. That's insane. Volkswagen says they will invest up to $1.2 billion in AI by 2030, feeding the technology into every area of its business in a bid to unlock billions in savings, the company says. And some of the big news today, Tesla China posts the strongest registration of Q3 so far, with 14,300 insurance registrations in China during the week of September 1st through the 7th, after the first Model Y L deliveries. And this is something that we are expecting here on this channel, is a very strong Q3 out of China because of the Model Y L. So you're likely going to see really good numbers Q3 and probably really good numbers for Q4, which is not something that a lot of Wall Street is expecting. Everyone's kind of thinking that Q3 is going to be strong. That, I think, is well known and priced in information, but Q4 could be very strong as well, and that is not something a lot of people are thinking about. Tesla has started asking Silicon Valley's 3 busiest airports about getting the green light to take travelers there as the company expands its ride-hailing service in the region. They say, quote, "We have received a request from Tesla expressing interest in securing a permit for operations at SFO and have responded back to begin scheduling discussions on this," the airport's public information officer, Doug Yackel, said to Politico. And here you could see the weekly breakdown of insurance registration numbers out of China. And it is one of the best weeks really of this year. In March, you had a couple weeks that were a little bit better. In April, none. In May, none. In June, you had 2 weeks that were a little bit better. So this is like the 5th best week of this entire year, if I'm looking at this correctly. So a very strong number. And really, you're at the point where Tesla, they're going to sell all the Model Y Ls they can produce in China. The question is, how fast can they actually get back up to a similar production speed as they had of the previous Model Y, which it sounds like we're there, if not exceeded that at this point. In option activity today from hedge funds and institutions, we have 70 different trades totaling $44 million with a positive order value of 59%. So it's a little bit more positive than negative. That's good. But again, on a day like today, where risk assets like the Russell, for instance, is actually falling, that's a really good number. Now, you can also see today short sellers are covering 1.31 million shares of Tesla. They covered about 2 million shares of Tesla yesterday, if I'm not mistaken. So short sellers, they're taking this opportunity to get out of their Tesla short positions. I think a lot of the recent rise in short positions has to do with the weak September seasonals. Like, I don't think anyone's like, oh my gosh, this is a bad time to be long Tesla. Like, Tesla's going to fall, so things are going wrong. Like, that's clearly not the Tesla we're dealing with right now. So logically speaking, I think it's, just September seasonal, shorting activity that you've seen recently. Well, long story short, that is starting to die down a little bit. As we get into October, November, December, seasonals flip sharply, and it turns into a much more bullish market, okay? A much better market. And I do expect Tesla is going to have a very strong end of the year rally. And people always ask, like, why would Tesla have a rally? Like, what's the catalyst? Well, yeah, I think we're going to get good news between now and the end of this year. The fact of the matter is we've gotten a lot of good news that has not been priced into Tesla. Elon's compensation package, robotaxi's launch, none of that is really being taken seriously by Wall Street at this point. Partially that has to do with seasonals, right? And that has to do with the shorting pressure, the bears, the sentiment out there in the marketplace. As things start to flip, as we start to get rate cuts next week, then things start to look a lot better from a momentum and sentiment seasonal perspective. And those are the catalysts we've essentially already had that are going to push Tesla's stock higher. Now, job growth was revised down by 911,000 through March, signaling the economy is on shakier footing than realized. This is the main headline on CNBC. So it says annual revisions to non-farm payrolls data for the prior year to March 2025 showed a drop of 911,000 from the initial estimate. It says here the numbers, which are adjusted from data in the quarterly consensus and reflect updated information on business openings and closings, add to evidence that the employment picture is weakening. Okay. So it says most of the time span for the report came before President Donald Trump took office, indicating the jobs picture was deteriorating before he began levying tariffs against U.S. trading partners. It says here, quote, the BLS preliminary benchmark revisions to non-farm payrolls showed a much weaker labor market over the most of 2024 and early 2025 than previously estimated. said Oren Klashkin, market economist at Nationwide Financial. It says, quote, importantly, the slower job creation implies income growth was also on a softer footing even prior to the recent rise in policy uncertainty and economic slowdown we've seen since the spring. This should give the Fed more impetus to return it to its cutting cycle. So yeah, the number was bad, okay? It says, quote, today, the BLS released the largest downward revision on record, proving that President Trump was right. Biden's economy was a disaster and the BLS is broken, White House Press Secretary Caroline Leavitt said in a statement. Quote, this is exactly why we need new leadership to restore trust and confidence in the BLS data on behalf of financial markets, businesses, policymakers, and families that rely on this data to make major decisions. Again, considering this was the biggest downward revision to yearly job numbers we've ever seen, markets are actually responding better than you would think. The VIX only up 1.92%, Russell down 0.78%, NASDAQ slightly red, S&P slightly red, Dow is up 0.1%. So it's not as bad as you would think. Scott Bessent said the Fed is restricting growth with high rates, citing new BLS data showing nearly 1 million fewer jobs in 2024 than first reported. Combined with earlier revisions, he said that the Biden jobs overstatement totals about 1.5 million positions. Bessent argued the figures show Trump inherited a weaker economy than thought and backed Trump's view that Fed policy is holding back growth. The revision suggests job gains were slowing even before Trump's new tariffs. JD Vance says the BLS data had become useless. As per Goldman Sachs, they say this was one of the best earnings seasons on record. And according to the U.S. Census Bureau, official poverty rate in the U.S. is at 10.6% in 2024. Renaissance Macro's Neil Dutta says the September dot plot won't align with the Fed's expectations. He says for it to match, 8 officials would need to lower their 2026 projections to 3% or less, a scenario he sees as unlikely. So he thinks the markets are pricing in too many cuts, and the Fed is not going to signal that many cuts, which would be a negative catalyst for stocks in theory, right? And we'll get a new dot plot in September, so next week. Donald Trump says the Federal Reserve is broken. It needs to be fixed. Now, Wolf Research says that recent Trump policy shifts, including tariffs, Fed issues, and stimulus moves, are unlikely to derail the U.S. equity rally. The analyst noted possible tariff refunds after a court ruling, but expect markets to absorb the impact, even if Trump reinstates tariffs later. Concerns about Fed independence, including a potential firing of Governor Cook, are seen as having limited near-term effects. Wolf also highlighted stimulus from the One Big Beautiful Bill and suggests weak payrolls may reflect immigration limits rather than soft demand. They expect these dynamics to support economic reacceleration into 2026. They say the bottom line, near-term policy risks look manageable and markets remain supported through year end. Here on the day today, the CNN Fear and Greed Index is sitting at 51. Market momentum is neutral. Stock price strength, extreme greed. Stock price breadth is greed. Put and call options, greed. Market volatility is neutral. Safe haven demand is fear. Junk bond demand and fear. And if you look at the AI Investor Sentiment Survey, the last one we got was last Thursday. But in the new survey that we'll get on this Thursday, I believe it's probably going to come in even more bearish than it was last week. Bullish investors at 32.7%, neutral investors at 23.9%, and bearish investors at 43.4%. So there's a lot of bears out there. Like, that is bullish for markets. You want bears. Like, if you're a bull and you hear there's a lot of bears, that is a green flag. That is a good thing. You want and or need to see bears to continue to keep the bull market alive. Now, the percent of stocks trading above their 50-day moving average today coming in at 61.35%. Again, even though you're seeing the Russell drop almost 1% today, you're only down about 1.31% today. So you are seeing a healthy market. Internally speaking, like there's a lot of stocks still above their 50-day moving average with no real signs of like stocks falling out of bed anytime soon, in my view. Again, once we get into October, November, December, that is where things dramatically start to improve from a seasonal perspective, and that's when I would expect Tesla stock to go through the next leg. This leg into year end, I believe, could take the stock to $500+ per share. So let me know your thoughts on this down below in the comment section. Hit that like button as well as subscribe to the channel if you've not done so already. Have a great rest of your day, and I will see you in the next one.